Hi, everyone. My name is Anne Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Excited to share what's going on in the markets today. Here's what we know. We are in some sort of equilibrium search in the markets. Notice the very wide range. Value area high, 61.22. Value area low, 57.44. We are now above that zone. And so what we expect is that old support is going to be tested next, and that number is 58.74. Markets and traders have been slightly short, but I suspect they're going to try to correct their inventory because they don't want this to keep happening to them. They don't want to find themselves flat-footed in a market that is really trying to head to the north and recover. What have we seen with advancers to decliners? What might that tell us? Also, it tells us that we are trying to find equilibrium someplace. So where is that? We had 4 days ago, we had advancers to decliners close the day about negative 500. The next day, we had a steep dip, began 1,600 less advancers to decliners, ending the day at about 800. Less advancers to decliners, meaning decliners were in the winning. The very next day, we began the day like a rocket with 1,900 advancers to decliners and closing the day at 1,200 advancers to decliners. And again, yesterday, we closed 300 less advancers to decliners. So what does that tell you? It tells you we're in a ping pong state. People are not aggressively buying every day. And when the big bounces come, they start taking profit. All right, that's what that space tells us. Now, it actually also tells us that in looking a little bit tighter into the market, and you go, oh, all those lines. Listen, these lines tell a story. And what they tell us is, wait a second, we are not in any real kind of trending formations. You will notice when we are trending, these numbers will not overlap. And now they are overlapping. Way back to the left, we have opening ranges that are up ahead for us to test. Way back to the left, we can see all kinds of spaces. And then we see what happens here in this range. It breaks right out and moves to the north. This is the day. We started the day with 1,900 advancers to decliners and ended the day with 1,200 advancers to decliners. Okay? So notice you don't want to go short just because advancers to decliners are moving down. If advancers to decliners are positive, it is going to push the market north. Yesterday, we had a sideways sloshy formation, but here's what it tells us. Look to the left. Always look to the left. Before you engage in a Globex opening range trade, which is the anchor of the work that I do as an individual, I look to the left and I go, okay, what's my low? What's my high? That's going to tell me how I need to trade inside of this range. That's number one. Number two, I need to know the overall slope. I can look at the 50. It's moving up, so I know dips are probably going to be buy zones. Transpire has this magnificent, hey, I'm going to lock in where the VWAP closed the day before. It very often tells us if it's an area that will defend as support or hold as resistance or sit to the side because trend is still upward, right? So you have to interpret all of those things together. So we look to the left, we know we're in a bigger range, so we say, probably rangy. The next thing I do is I look at the slope of the moving averages. They're flat, probably rangy. And so when I say, hey, I'm breaking out over the Globex opening range high, I think to myself, that's probably going to move back into the Globex range low. And I know that low can be all the way into this space. And if I break out in the high, it can go all the way into this space. So let's take a look at what's going on in the overnight last night. Here's our opening range. Again, we're in a very tight formation, but the prior day tells us, okay, I've got lows to look at, prior Globex opening range formations, and I've got highs to look at as targets if I break out. How do I go into the morning? Well, kind of flat. I'm still in the range. I haven't broken out. So if I breach my Globex opening range high, it tells me, it's probably going to come back to my Globex opening low, right? When it breaks the Globex low here, really the retest of that failure, because we're in a range, tells us where the real trade sits. So there's a short here at 1 a.m. There's a short here at 3 a.m. Where's the target? Bottom of the range. It also holds with that 50 simple moving average. And now, as I mentioned, overnight inventory largely flat, largely down. We're flat in a range. So what do I expect the buyers to do at the bottom of the range? Take us to the base of that opening range and then potentially to the high of that opening range. Okay, so that's what we're staring down. I did have a long here at this ledge because I did think it was going to go to the top of the box. I am now flat, okay, because it is at the base of that opening range low. And since it was the initiation of the short, it has got to be the completion of a long because I'm in a sideways patch. Now, could you leave a runner on? Absolutely. You've got an upward sloping 5, you just kiss the 50, you're above the VWAP, and you've got an inflection in your momentum. Is that a lot to look at? Yeah, it is. But no individual instrument is going to tell you exactly what to do every time. There's always going to be nuance. Always. Look at this. See how it gaps here? Here's our opening range. We don't have anything here. So we know the break of this is very likely to continue, whether up or down, right? So then, let's say you take the break right up here and it begins to fade. Well, your thought should still be, all right, can I manage the risk, which is probably half of this range, right? So if you take it at 56, 57, you're going to have 8 or 9 points of risk. If you don't like that, wait until it defines a new risk. It does, and then it gives us 6 points, and then you're off to the races. The 5 straight up, no noise here. Go back and have a look, folks. Does it all the time. It'll either accelerate in a new direction or come right back into the noise. That's all it does, right? All it does to facilitate the trade. Let's get to the NQ. All right, let's look at the daily. What are they trying to do? We're really struggling at the 200 here. Do I think we're going to break it? You betcha. I do. I think we're going to break it. Now, can we break it without some sort of savage dip? Maybe. But we are above the 5. We have an upward sloping VWAP, right? Pullbacks are going to be buy zones. Here we are dancing at the 200. Look what happened last time we danced at the 200. Huge range. So be careful today. If you're just simply taking a long, do 1 micro and try to look for support. Or you're going to blow your position out, right? This, when you work in a combine or you work in anything like we do at Top Step, the size of your account, it says 50,000 if you're looking at that event, but you really only have a $2,000 account. Do you understand? Because after you've gone through your loss limit, you're toast. It doesn't matter, 50,000. Now, the 50,000 is what gives you the leverage to move up, but you really are working with a small account. All right? That being said, that's what we're staring down. What are we going to look at? Next target, volume point of control, 20,700. All right? Inventory is going to try to correct. Let's go to the 1 hour. Right? Again, what do all of these lines tell us? Right? Don't let these lines terrify you. They're telling a story. And the story they're telling is, wow, I'm congested. I'm congested. Now look at what happened yesterday, right? Here's the opening range, breaks down. Well, how do we know that? How do we know it's going to do that? We look to the left and we see heavy congestion. We go, oh, all right. That's where they're collecting inventory. Heavy congestion means inventory collection, inventory accumulation. Here they go. Break down to the bottom. That's the buy zone. Right? Sometimes it's not going to come for you, but you get to have it, right? And then it accelerates to the bottom of the opening range, top of the opening range, breaks out to the prior day's high, retests the opening range high, gives you another long. What are we doing here? Congestion. We broke out at the top of the range, right? Here's the breakout area. Moving averages up, right? So you might go, okay, that's a long. But here's the thing also. See these 2 days of massive moves, relatively speaking, big moves. In the brain of the trader, big moves, congestion zone. So what do I like to do? I like to go, hey, if this is breaking out, I've got to see how I do at the old areas of Globex congestion, which happen to be, some highs that broke out. See, we're in the range of yesterday. So as it breaks to the north, we say, I'm probably going to go back to the base of the range. It's very important that we stare that down. Very important. So what does it tell us? Okay, if I want to take a long, I probably need to hold this support. So let's say you buy it, old resistance, new support. What does it immediately show you from the image in the chart? 1, you're under the VWAP. 2, you're under the 5. So what does that tell you? If this long doesn't work right away, I'm getting out of here, because the failed retest of that old high ends up being the short into where? VWAP, closing VWAP right down here. Really, it could come all the way back here. But I'm looking for the area where there's heavy congestion, prior support. That's going to be my target. This is why I got out of the long, right? It's coming right back into old resistance, new support. Now, could this be, some kind of ugly head and shoulders pattern? Yeah, I don't use those. But what are we staring down? Here's the 50, well below where we are here. Here is the last heavy congestion zone. So dips certainly could be buy zones. You want your size to be small. Ideal place, I love 20,400. It's the bottom of the last breakout range of congestion. But here's the thing. If I start printing up here, I'm going to continue into the low of the Globex edge. And if I break out here, what I've done is do a round trip, high to low, and then I'm going to break to the north, right? Because everything's been resolved from that perspective. What do I suspect? A grinding move to the north. Could we end up seeing sideways action based on the news that I've completely forgotten already that could move us? Yes. You watch those ranges, folks. Watch the ranges. Here is the YM, right? YM had a little bit of a doji yesterday. Sold off a little bit into the close. It's sitting at the volume point of control for this particular range. It's inside value area high. Look at this. This is a stinking mosh pit, right? It is hideous. But we are above a 5. We have an upward sloping VWAP. We're above the 200, and we have slope on our stochastic momentum index, right? I wish they had that indicator on Top Step, but they don't. So here we go. Where should we go? Well, let's look for heavy congestion. Where did the buyers give up here? 43,305, and then they entered another area of inventory accumulation, right? But that's the last area. So 43,505, that's the next area. That's about 400 points. Could it be Wiki? You betcha, right? You betcha. The narrative has been so ugly about everything moving into the toilet. All of a sudden, the market starts moving up. People are like, well, I got to sell some more subscriptions. What am I going to say? I don't mean to be, listen, people are going to push a narrative. Just pump the brakes and just look at price, okay? That's all I'm saying. And what does this tell us? Holy cow, Anne-Marie. It's a mess. Yes. Where did we open up? Globex candle. In the range of the prior day. So what do we anticipate? Breakouts, gonna fail. Breakdowns, gonna fail. But how are they going to fail? Right? Listen, this breakdown essentially failed, right? Because now we're at the top of the box again. So how do you work that? You go to this area here and you say, okay, That's the total range. So potentially, I'm going to sit in this box and resolve until I have inventory distribution. And notice, we get to walk through several of those into what? That 43,300 area that is up through the space. There's nothing but air here. So chances are, if we break out of this zone, we try and test from 42,950 to 43,035. What does that mean? Listen, this is not an environment where you just blindly buy the breakout. You must say to yourself, okay, maybe I can find a dip to buy. By the same token, if you're using the Globex and you go, oh, there's my breakout, I want to go to here. If it doesn't hold that opening range low, that Globex opening range low, this is not going to work. It means it's sitting inside of the box. Will you test the trade? Maybe it doesn't give you what you want. For me, old resistance, I don't love buying breakouts. I like buying the pullbacks that hold. JJ calls it the look above and go, right? This is a look above and fail. A look above and fail is a short that pushes us into the space. This is a look below and fail, and it pushes us right back in to the inventory base. All right? Does that get sticky sometimes? Will it give you a little chop? Absolutely. But frame out from the big picture and go, wait a second. If I'm sitting in this range, where are the buyers going to show up? Where are the sellers going to show up? Until they don't. And notice the 50 comes right in, holds the same area of prior congested support. And where are we now? Top of the Globex candle. What's going to happen here? People are going to cover their longs. Why? Because they covered them the last time. Could it be that this is a look above and go? Right? It could be. But when the look above comes and it pulls back, it's going to hold a higher low. So you look for the higher low and you say, all right, let me see if it comes into the bottom of my opening range low. And that's where I'll take a low because my 5 is up, I'm above my VWAP, and my 50 is trending to the upside. Right? Write the notes down. Actually, no, my otter won't do that. But nevertheless, here we go. Have a gander. What's going on with micro Bitcoin? Here's the thing. Bitcoin traders are trying to recover 90,000. The 50 simple moving average is 93,400. So that's really kind of the resistance area, but look at the whole picture. See that? This is inventory accumulation from high. They go, all right, I'm going to wait until it gets back to the low and I'm going to buy some more, right? Tighter traders are saying, okay, here I am buying. Here's a double top. I'm going to sell it until it gets to the bottom of the balance area, and then I'm going to buy it again. And what happens a lot of times between the 50 and the 200 is the ping pong effect as it's grinding to the north. Notice, see the higher lows? They're coming in on the dip and they're buying it. Look at how tight these candlesticks are, though. Tremendous amount of indecision. It feels like overall the market's going to have some kind of pretty substantial move, and I'm guessing it might be to the upside. I don't know. It feels a little bullish. All right, so here we are, sitting in the space of we're above the 50, we're above the VWAP, we're well above the 200. We're in the 5, but look at this, right? So what does it tell us? I'm in a range. Am I making higher lows? You betcha. Could I make higher lows again? Yes. Where might that be? Yesterday's closing VWAP line. That's what these dots are. 87,500 looks like a pretty good buy zone if you are staring down Bitcoin, and takes you up to 88, maybe 88,800, and then 89. The traders are trying to recover 90. Notice the space. We've got essentially $1,200 of motion that does not have opening ranges in it. So easily, if they catch a foothold, they'll be moving to the north. If they do not, we're going to lose the opening range of days prior, right? This is this morning's opening range, 87,265. What is that going to tell us? Well, if it loses that zone, look out below. 86,705, 86,235. Okay? Could it be a double top? Yeah, good. But with these higher lows, if it gets down to here and you take this trade short off this edge, if it were me, I would take some profit. All right, let's go to oil. Early. All right, so this guy I follow on X, oh my gosh, he's so belligerent. Very smart guy, but he's right and everybody else is wrong. And most of the time, he is. But he's wrong about what's happening right now with oil. He believes that oil is going to go back down to 55. There's too much geopolitical risk sitting out in the landscape, and we're inside of the value area between 68 and 74. So what are the traders doing? Look at this edge, right? Is this an easy market to buy? That would be no. That would be no. Wait for the dips and then take those. What have we done every day? Essentially, the dips have been bought. Every day, the dips have been bought. This morning, big punch to the upside. Where are we headed? Point of control. That's $70.39. And the VWAP. And the 50. $71.13. I think that's where we're headed. We could be headed much higher, but that's what I know. Well, I don't know anything here. That's what I suspect the trend is showing me. So let's go to the hourly chart. Let's see. And, here's the thing, folks. This opening range event, you can do it with any trade, on any chart, in any instrument. Bar none. Why? Because humans are working on this and we naturally imprint ourselves on anything that we do. Okay, here is an opening range. What do we do when we see the opening range? We look to the left. We go, oh, crud. It's sitting right inside of yesterday's box of opening ranges. So what am I going to do? I'm going to look for the low of congestion, and I'm going to say, all right, my 50 is up. If I've got low of congestion and I get back above 69, I've got myself a long. Where does it go? Top of the range. Notice they tried to sell it off right away, but by then, VWAP is up, 5 is up, we already know the 50 is up, momentum pegged up at the top of the range here. Double topping formation, we went to the middle of the range, and now we are trying to get out of the range. Here's the initial look above. Initially, it's failing. Well, yeah, it's sitting in a big box and it's trying to get out. They saw the sellers there the first time, they're going to try them again, but if it holds the high of this opening area after it breaks higher, it's likely to be a long. So what do you want to do? Wait for the top of the box. Wait for 59.45. Will it leave you in the dust sometimes? Absolutely. I was talking to Maurice just a little bit ago, well, maybe a couple days ago. Everything runs together for me. And I said, hey, here's what I would do with Tesla, but it often leaves me in the dust. And Tesla did make a pretty good move off of that range. Sometimes your least risk entry is not going to come back for you. And it's your decision to go, I'm going to chase the market, or I'm going to forego the trade. That's part of the human decisioning event inside of the trading space. Okay, here's the one that's surprising me a wee bit. Gold is fiercely holding this 3,000 zone, right? 3,006. Let's put it right here. 3,004. Are we making lower highs? Yes. Are we making higher lows? Yes. What is trend? Up. Big distance between the 5 and the 50, but whatever. Trend is up. As long as this thing holds 300, it's going to try to push. Look, old support, new resistance. Now, in my mind, this looks like a short, right? With my stop at 30.45. So that's a pretty big piece of risk if you're taking gold flat out. But you can use micro gold and do the short. Here's the thing. If I have a look above and go, it's not going to break below 30,015. So if I take a short here at 30,030 and I can't get under the opening tick of the day, which is 3,025, I am not sitting in the right side of the trade. I have to adapt. And what's all these? What do we know about these? Heavy congestion. Very heavy congestion. Look at the accumulation. This is inventory accumulation. 200 still straight up. 50 flat. 5 up. We're above the VWAP. Sellers here all day long. This is the other reason that I go, hey, listen, I'd like to sell the 3,033, right? It's essentially counter trend to what the chart is doing, but it is sitting in the box. And so if it gets above that, yeah, you could use 3036. If it gets above 3036, probably going to 41. So better to cut the losses there. Or if you're looking for the long, see if it comes into the target short at 3,025. 3,025, that's going to give us a better space to take long. I potentially see gold heading much, much higher, but I thought that we would have some sort of correction further to the downside. And I'm still inclined to look at that, but the trade formations are telling me, not so fast, Missy. You might be wrong. And so I try to listen to those trade formations when they're screaming at me, as they often do. Okay, here we go. SPY. Where are we? Above the 200. This is our third day, trying to open in the range. We've got a liquidity line at 574. Broke right through it a few days ago. Monster move that absolutely collapsed. Listen, when we have low volume, see the volume declining here on the way up? That means markets can expand and contract because there's not, imagine water being sloshed around between two sponges. If the sponges are big, that means traders, I can slosh a lot of water back and forth and nothing will get through the sponge. But if the sponges are little, as in not a lot of participation, not a lot of activity on the ladder, not a lot of traders positioned to prevent flow from accelerating in one side or the other, I'm going to knock those sponges right over with not a lot of force. That's what we're staring down here. That's why wicks feel bigger than they normally do. And that's why they are bigger than they normally are, because volume is compressed. When volume is compressed in a direction, it has a tendency to reverse price very quickly in whatever direction. So deep dips, still going to be buy zones. Point of control, 560, that feels like a hard line of support. If we break that, we got probs. But so far, so good. So where are we going? Middle of the box. 580, potentially 590. Dips are being bought. Now, how do we do that? Look at the compression, right? Look at where we open, right in the middle of the range. So what does it tell us? Breakouts, likely to head into frontline resistance. Breakdowns, likely to hold into frontline support. So pick a direction. And for me, it's trade the range. Try the shorts as high up as you can. Try to take it to the bottom of the opening range. If it doesn't give it to you, you're on the wrong side of the trade, right? Manage your risk. Say, uh-oh, I'm staying above my opening range high. I know it broke it before, but I'm going to take my pennies and leave. Or you might go, oh, well, I got in here, and now it's stalling out. I'm going to bring my stop in, because if this holds, I'm going to have distribution. Easy peasy, right? Just have to listen. In my office, I talk to myself constantly, out loud. Start talking to yourself out loud. Listen, if you're in a room with a bunch of people, they're going to think you're bananas. But that is not new for me. I just want to tell you, people think I am crazy most of the time. So talk out loud of what you think your frameworks ought to look like, and then turn those muddled thoughts in your brain into things that make sense. What are we doing here? Upward formation. Look at the volume. Across the board, folks, this volume falling down doesn't tell us where the price will go. It tells us if the price will stay. And what it's telling us, it's heading to the top of congestion, and unless this volume starts picking up, it is going to move back down. So where are we? We made two big moves above value area high, and we came into value area low, trying to bounce. Qs have not gotten up over the 200. We got to get up over 495. If we can't, we're headed back down. More congestion, right? This is a bimodal distribution, right? It's got two areas of compression. And so it's likely that we move from one to the other. So dips are buys. Okay. How far is the dip? Don't blame the tweets, folks. If something stops you out of a trade and you blow your account, or some horrible news comes and you do whatever and it blows you out, it's you that didn't manage your risk. Listen, I know that's harsh, but as I've told you many times, in my family, my husband is the one people go to compassion for. Me, not so much, right? Manage your risk. If you don't manage your risk, a tweet is going to blow you out. Or whatever craziness happening in the market. Where are we? Compression. Look at yesterday. Here's the opening range. I go above it, probably not going to hold. My target might be 394. That's what we've got to get over and stay over, folks. 394 to 395 to, 494 to 495 to 498. That's what we're staring down. Compression area says, if I lose this zone, this is my next support, 491, right? Could I take the short up here? Of course you can. But if it stays inside the box, you know that that short does not have legs. Move your stop in and say, okay, my stop's hard. If it blows out, I'm done. But if it comes into proper support, I can take my money and run. All right. Hey, listen, I know this was a little longer. Wanted to get a little more mechanical with you. Not a ton of you watch these, but they're good. I just want to say. Hey, I'll see you on the streams. You know where to find me. Take care, and thanks for watching.